Hello there, traders. Welcome to the live stream. Get going in a couple of minutes as per usual. Hope everybody's doing well. Got a little bit of data coming up today. We've got that US CB consumer conference, so be interesting to see what happens here today. Obviously, UK was on bank holiday yesterday as well as the US, so a little bit of a lighter market yesterday. Expecting everything to open up again today. Expecting a little bit of volatility over in the States and the stock markets. And really speaking, this week, we've got some big data, especially in the US. We've got that GDP data, unemployment claims on Thursday. But the big data drop is going to be the core PCE price index on Friday. Big risk event on the horizon here. I believe that we'll probably see some decent volatility towards this event. At the moment, we are seeing that little bit of continuation in the dollar weakness, which is quite interesting. Hi, Just For Nothing. Hope you're doing well. Bruce, good afternoon to you. I'm doing really well, thank you. As always, guys, let me know what kind of charts you're watching this week. I'll go over some charts that I'm watching. I did an updated 50 MA currency strength meter, as well as obviously the old currency strength meter as well, giving similar readings still. Pound still looking fairly strong. Now, I haven't done any currency heat map work on this, to be honest, in terms of looking at how the market closed yesterday, things like that. I was obviously bank holiday yesterday, so tried not to stay on the markets too much and keep up to date too much. So I'm just kind of filling the gaps today in terms of data and whatnot. So we can go through a little bit of this, kind of what I look for on those kind of key currency pairs. I need to fill in the change form here, to be fair, but nothing's really changed too much in terms of currency strength and weakness when it comes to the 50 MA. Really speaking, we had a little bit more upside in Kiwi. So definitely the sort of markets that we want to be really buying right now are the New Zealand dollar, and we want to be buying the pound. I actually need to reduce that number from last week back to 6. But yeah, Kiwi, pound, still really strong currencies. Yen, still very weak. CAD and Swiss, still fairly weak as well. So nothing's really changed in terms of those markets that I want to be looking for kind of bullish opportunities on. On the short side of things, not really seeing too much in the way of shorts. We'll have to see if we do get any kind of reversals. The only one I can see here is pound at the moment. That on the normal currency strength meter is showing as +6. So looking at the potential here for a reversal on the pound at the moment. But that being said, pound's still a very, very strong currency. And if we go take a look at cable, we're actually approaching the 128 handle right now, which is something that we've been kind of eyeing up since we broke this 126 level. We've continued to push higher, and I do think cable's going to be a bit of a mover. Obviously, last week we had the sort of announcement of the election coming up in the UK. So Rishi Sunak announced the election to come on the 7th of July. And the market didn't really react to that. And I think that's because it is kind of expected that there'll be a Labour government now. I think in the polls and things like that, it suggests that Labour are going to win by a majority. So I think the only risk there is if they don't win by a majority, then that's where the risk is. But at the moment, market not really seeing that too much as a risk event right now. pretty much priced in, to be honest. And we're still seeing pound strong currency. Now, how long that lasts is a different question. I mean, if we look at the 50 moving average right now, we're trading around about 126.15. Now, 50 moving average is just showing us the average of price over the past 50 candles, okay? It's showing us that at the moment, the momentum is to the upside. Buyers are trading above the average here. So we can see that pound is a very strong currency. If we look across all the other pound pairs as well, they are pretty much above that 50 MA across the pairs respectively. So we can see that pound is strong. So we really want to be a buyer. I want to be a buyer of pound. I think as well, pound Kiwi is the one that's below the 50 moving average. So that's showing us how strong the New Zealand dollar is as well. Pound very, very strong at the moment, but pound Kiwi below the 50 MA. So that's the only currency pair that is at the moment in terms of the pound. So Kiwi, very, very strong. Still looking to be a buyer of that, especially against the Canadian dollar, the Swiss franc, and the Japanese yen. So last week that played out pretty well. You can see there was sort of 3 or 4 opportunities last week, all played out really well if you were a Kiwi buyer. And we've got some levels to talk about today in terms of areas of support and resistance. So we'll go have a little look at those in a little bit. But yeah, guys, shout out in the comments. How are you all doing? Hope everyone is doing well. Just nothing. Where will S&P futures be headed, down or up? I think it depends. Obviously, we've got big data coming up this week. Market's almost a little position to the short side, I would say, right now. If we just look at the S&P 500 here, you want to look at futures. We can look at the E-minis if you really want to. You can see that we've got this sort of, I would say, a bit more of a bearish outlook right now. You've got although price, again, above the 50, I usually like to be a bit more bullish on price. But looking at the price action just here, we obviously had sort of a consolidation period, sort of a channel that was created up towards those kind of 5,360s. And since then, we dropped down towards the 279s and then back up towards the 330s now. So to me, that looks a little bit more on the bearish side if I was just looking at it purely from a price action point of view. You know, I imagine a lot of volume would have been traded through this area. We've breached it and we're coming back up to test it. We've got big risk event, like I said, core PCE at the end of the week is going to be a big mover. And I think the market may be a little bit sort of sensitive to this data. We've also got some data coming up at 3 o'clock. Obviously, this is an important piece of data as well, as it gives us an idea of consumer spending within the market. So really speaking, this has been on a sort of downward trajectory for a while. Since the sort of January of 2024, we've seen a decline in the CB consumer confidence. And that basically just tells us the sort of conditions in the market. You know, are people spending? Where are they spending? You know, generally, what is the spending activity within the sort of 3,000 households that get asked to perform the survey? So that could be a spark in a little bit more downside here. I think what I quite like here is the fact that we've got some downside pressure, pullback. Could we potentially see some further downside? Oh, 1 second, guys. I'll be back in a second. 1 second. Sorry, guys. I had to sort something pretty quickly then. Oh, running up and down the stairs. Right, so got this little bit of downside here, potentially, on the S&P 500. Hey, Vincent. Hey, CG. Hey, you know. Morning, John. Can you share your thoughts on Ripple? Yeah, of course I can. You know, I've actually got Ripple on here. Let's have a little look. Now, obviously, Ripple really, I mean, if you keep up with cryptocurrencies, can be pretty interesting. I know they're going through a bit of a battle right now, potentially going to be fined a fair bit from the SEC. So prices have been relatively low on Ripple. And I don't really see that changing too much right now. Not until the outcome comes out. I don't know when that actually, the outcome of that is going to be, or when the final hearing is. But I do know. Let's have a quick look. Let's see when that hearing is going to be. Okay, so it says that there should have been a court hearing, but there's been no update as of today. But yeah, Ripple was basically about to be fined around $2 billion. And basically that was because it was selling unregistered securities to their institutional clients. And that's what the SEC is fining them for, essentially. So there was a point where if they were to get this $2 billion fine, where would that kind of place Ripple? And I don't think we'll see much movement until that is done. I mean, I'm looking at it in terms of this sort of range that it's in, and I think we'll be sort of pretty range bound until we kind of breach either side. Obviously, a breach to the downside wouldn't be particularly great for those prices, but you do have kind of support down here towards around about 13 cents a coin. So, you know, obviously we've had huge rips on Ripple in the past, being around $2.7. But at the moment, like I said, that SEC ruling could be pretty detrimental to what happens with Ripple next. But I will keep you updated on that. I do a crypto post every week, which will be on a Blueberry email. So if you do want to keep up with that, you can. I was going to be doing a live webinar this week, but we've pushed it back to the 3rd of June now. We're going to be covering the Bank of Canada interest rate decision. So keep an eye on that one as well. But there's some interesting markets out there. We've seen silver absolutely rip higher. We've breached all this support here. We were looking at longs from around $22, and it's continued to sort of, you know, rip higher. Lots of demand for silver at the moment, as well as gold. Obviously, central banks looking to purchase the commodities. Big uptake in solar panels as well globally. Silver is used in solar panels. So there's a lot of demand for silver at the moment, and we can see this is continuing to rip higher, around about $32 at the minute on silver. We've got all these highs that formed back in 2011 and 2012, which would be interesting to see if we continue to trade higher. These would be targets for those buyers on the upside. So the next kind of point of interest on silver for me is going to be around $35, which are these highs that formed back in November of 2012. This is a weekly chart, by the way, guys. So we're looking at it from a kind of weekly point of view. So I expect a sort of extension up towards that $35 level. So if we're looking at it in terms of sort of strategies and things like that, I'm looking at this 4-hour time frame here. You know, we consolidated here in that sort of triangle pattern, very similar to what we saw on gold. You know, we talked about gold and that sort of bearish pattern that formed. Price breached that, traded lower. Again, we consolidated between a little bit of a zone there, and the market has ripped higher. So I wouldn't mind seeing price come down back towards this area of consolidation. For me, consolidation is where we get an accumulation of buyers and sellers. So, you know, I like the idea of either looking for price to come back, for it to continue to be bullish, or I like the idea of price, you know, we look for that kind of mean reversion back to the volume, essentially. So at the moment, this 4-hour chart still moving higher. Nothing for us to technically do right now. Maybe if we come in towards the 32.40 highs, where we saw aggressive sellers coming in the past, you know, just through here, then maybe there is an idea that we could see some selling again coming into the market. But I think any strong sell-offs that we see in gold, in silver, will probably be met with aggressive buying again. I'll be seeing that as pretty cheap. You know, if we look at this 4-hour time frame as well, above the 50 MA, daily above the 50 MA, weekly above the 50 MA, all pointing to the momentum being bullish right now. So I think any kind of breaks back below, especially on an hourly time frame, any kind of breaks back below, back above, good areas of entry for me at the moment. So looking to basically see, do we get that again? Do we see price kind of rip back up into these $32 highs, $32.50? Do we get a little bit more sort of bearish price action in here? And does the market kind of play itself back maybe towards this volume area down through here? And then I think that could be a good area as well to be a buyer again of silver. Okay, don't really want to be buying it while it's approaching highs, because I just think where's the reward to risk ratio on this? You know, do you see if I just buy now, for instance, as a trader, I'm looking for areas to maximize my risk reward ratio. Stops here, you know, not very great. I'd have to go and target up at that $35 area and just assume that price is going to breach the highs there. Whereas if I try and take an entry down towards these lows, at least I've got good risk reward ratio back up into previous highs and then back up into that $35 level. So I like the idea of being long silver at the minute, but I'm just waiting again for a little bit of a correction. Can we get a correction coming back down? If I watch this daily chart, maybe we get some kind of daily chart build up where price comes in, rejects, maybe tries to take that low, for instance, and then kind of creeps back to the upside. So a little bit of patience required here for silver, but I do like longs on that. Same with gold, really. Like longs on this as well. We did get quite an aggressive sell-off last week. The market did try and breach all-time highs again, around about that 24K sort of level. And the market has retreated from that, again, holding. But I just see any kind of rips lower at the moment in sort of gold and silver as buying opportunities for those central banks that have kind of jumped on the recent moves. I think the difference between silver and gold here at the moment is we're kind of back in that area where we were looking for buying, essentially. So it's come back to that point now. So looking at the 4-hour time frame, I've had a very tentative climb back to the upside here. Obviously, very aggressive sells coming in after it breached that consolidation, which we were talking about. And the market is now kind of creeping higher. So it's not very aggressive bullishness from here right now. So that means to me that there might be a little bit more to the story. We might see another move to the downside before seeing a continuation. And, you know, again, a good tell for me is where's price relative to the moving average Is it above it? Is it going away from it? Is there momentum with it? Or is it below it moving towards it? And to me, that means the momentum's coming back to the average. We do have a little bit of resistance here, to be fair. You know, there's that sort of bullish candle in the middle of this sort of aggressive drop. So, you know, you could be potentially looking a little bit more short side on the gold right now, on gold prices. Maybe looking at your this sort of previous pullback. You know, maybe you could go down to your 15-minute time frame if you start seeing. Let me just take the VWAP off here for a second. Maybe if you start seeing some kind of bearish price action in here, you know, something like that, where we get that kind of break in trend, then gold prices might want to come back lower again. So that's also something to really consider there on gold. But yeah, I just think at the moment, lots of central banks continuing to buy gold at the moment. You've still got sort of tensions brewing globally as well. Obviously, there was that reporting over the weekend that an Egyptian soldier was killed by Israeli forces. You know, that is going to increase tensions. And yeah, to me, that is, you know, potential for a reason for gold to be that safe haven asset again. Just nothing. I hope I answered the question with that. Sorry, I didn't even see the question. I was just kind of ranting on, but hopefully I answered your question there. But yeah, you know, I mean, a lot of the times we have to expect pullbacks, right? When the market goes on a large move, you know, the market is going to pull back at some point. You know, buying up towards these highs is not a good thing to do, because again, think of your risk and reward ratio. Think like you're trading with, you know, let's say you're trading with 500 million, okay? Something stupid, right? And you might think, where's he going with this? But would you be trying to buy gold throughout this period here? Would you be buying gold here, essentially? If you had 500 million and someone said to you, would you risk 500 million right here, right? You wouldn't do it. You wouldn't do it, because prices come all the way back up into these highs. You would rather risk that amount of money down towards an area where you've seen active buying in the past, right? So that is something that I always try and think about when I'm going into a trade. Maybe not more on my day trading side of things, but from a swing trading especially, I will always think about the idea of being a buyer at lows and selling at highs. So I still feel like we're not really at the main lows yet. So for me, I'd be happy to see price kind of come in, pull back down a little bit, and then maybe go back to the upside there. Maybe a test of the average would be nice to see from a gold point of view. So let's go back to the majors. Obviously, US dollar index starting to push lower again. We were kind of expecting that this week. We kind of had a little bit of a pullback last week. Friday, that bearish candle came into play, and Monday and Tuesday so far have continued that decline. And I still feel like maybe if we breach this trend line support, then there's an idea here that we're going to see a continuation. Now, what I do like to look at is the bond market. You know, I'm just going to put in a trend line here as well, because I feel like if price breaches this trend line to the upside, then I feel like there could be an opportunity to be a dollar buyer again. And I do like to look at the bond market. You know, the market is highly correlated to what's going on in the bond market. And if we look at the 10-year, okay, we can see that obviously the market has recently come up and sort of tested around about the 4.5% again. And, you know, we did start to kind of find a little bit of a footing here. And like I said, the correlation between the dollar index and the bond yields are quite strong. If I take off this 50 moving average here, move it onto a line chart, and all I'm going to do is hit that compare button, bring in the US dollar index, and then what I want to do is pin that to the left-hand side. And we can see how correlated the two are, right? So what I'm looking at essentially here is the orange line is the dollar index. Okay, if I open this up, you can see that minus 0.64% is the dollar index. And the white line here is the bond yields, okay? And quite often one can lead the other, okay? Sometimes when the bond yields start to rise, then the US dollar index starts to rise. If we see a little bit of downside in the US dollar, you know, the bond yields can kind of follow that as well. But really speaking, we want to be watching what happens in the bond markets, okay? And what I'm seeing at the moment is, yes, we have sort of an upward channel being created, but we're in that kind of point where it's a little bit of an unknown. We're in that sort of downward phase, but is it an unknown whether we breach to the downside or whether we hold it and start pushing back to the bullish highs there? And I think this week could be a big catalyst to what drives bonds. Obviously, if we see the PCE index coming in lower, then that means there's likelihood of obviously lower inflation, and then the market's chances of 2 cuts this year kind of come back on the table. But we have to also understand that we've come from having potentially 4 cuts this year down to 2 cuts. And usually we only see cuts happen in markets that are, or in conditions that are sort of recessionary, right? Or there is some major shakeup in the world, and then we get this kind of reaction from the central banks to bring rates lower to kind of help increase that sort of spending in the economy, right? Help businesses and things like that. We're not really in those conditions at the moment. So I still am a little bit more of I don't think we're going to see a cut right now. Obviously, forecasted cuts are now leaning more towards September. But I think if the Fed don't cut in September, then you've got the idea that they're not going to cut at all, because you've got the election then coming up as well, the US election in November. So if the Fed don't cut, then they're going to be under some real pressure to potentially not try and cut rates around the election. So I do think it's going to be quite interesting. That's why I think this data coming up at 3 o'clock is also going to be pretty interesting as well. You know, what is consumer spending doing at the moment? A higher number, obviously, we'd see a little bit of dollar strength, a little bit of gold downside potentially, although the correlation's not sort of there at the minute. And let's just have a little deep dive into that, because I think initially we would be looking at the sort of the fact that there is a correlation between gold and the US dollar index, right? And that is a natural correlation because gold is pegged to the US dollar. But recently we're not seeing that, right? If I just go to the gold chart in here, and we can see this physically, and I think this is always something good to do when you are trying to trade gold. Always look at your correlation. So this is a daily chart, line chart of gold, and I'm just again going to apply the dollar index to this. I'm just going to pin it to the other side so that we can see it together. Okay, so we had a period here where you can see that obviously gold prices and the US dollar index were pretty close together, right? Usually there is a sort of negative correlation. That's why you see here, this is gold prices and this is the dollar index. As the dollar index starts to rise, gold prices fall, right? As the dollar index rises, gold prices continue to fall. At the moment, we've got a little bit of a similarity going on. That has started to just wane a little bit. So we can see obviously gold continue to rally. The US dollar index has started to phase. But I think what was worrying was this area in here, okay, and especially this area as well, where we had the US dollar index and gold prices rising. We've had a little bit of a correlation between the two, and now look, it's starting to split again. So maybe we can now start to look at the US dollar index. So I haven't actually looked at this for a couple of weeks, so this is quite interesting to see now. We've had a short rally in the US dollar. Gold prices have fallen. We're having a short decrease in dollar index. Gold starting to move higher. So maybe now we can start looking at that correlation again. And maybe now if we expect the dollar index to break these lows through here, maybe gold's going to continue to push higher with a little bit more sort of backing, essentially. So that's also something to just take into consideration there. Let's put that on a chart. Vincent, which of the pairs do you trade the most, majors or minors, and why? Definitely majors, because there is obviously more volume there. They're traded more. You know, minors are technically made up from the majors. So if you are trading pound yen, you're not trading pound against the yen, you're trading pound US dollar versus the dollar yen. So I always say majors are sort of king in that respect. And that's why I created the currency strength meter and the way I use it. I do that because it gives me potentially a good area to focus, because you're looking at it from a point of view of maybe not this one because that's just a 50 moving average one, but this one definitely here. You're taking a sort of an outlook on all the pound pairs, and you can then make up your mind on what happens with the pound. Obviously, you've got other things that you can look at as well. You can look at, you know, bonds in the UK. You can look at other things. You can look at this sort of pound index, for instance, which kind of gives you a little bit of a scale. So if you just go into, let's see if I can find it. So you got pound futures here, 10-year. Let's have a look at pound futures. I'm looking for the index. Very similar to what the sort of let me see if I can find the ticker for that on TradingView. Pound index, TradingView. What's it called? British Pound Currency Index, the BXY. That's what it's called. There you go. So you got the British Pound Currency Index, and that is, again, a basket of currencies against the British pound, right? So you can see at the moment, very bullish. Okay. So you can add that to your watch list if you want. Very similar to the DX. But I prefer trading the majors. So, you know, euro, we're starting to see price come up into this kind of area here. Pound, 128. So this is what I'm kind of watching for now. 128 has been hit. The last time we were here on cable, we saw an aggressive sort of sell-off. So what I like to look for at that point is, are we going to see selling again, or are we not? You know, and the beauty about waiting for technical analysis now is to, if price is going to reverse here, we should see sort of a pattern form here, or at least a sort of rejection and a lower high setup. And if we don't see that, then the market's likely to go to the next point of resistance, okay, which is all the way up towards that sort of 129 handle. So that's what I'm looking for here on cable right now. It's the potential for that to kind of break through. But other currency pairs are quite like, you know, you got dollar Swiss still. You know, this is good. I did a video on the carry trade thanks to Royston last week, who pointed out some carry options. So I wanted to kind of discuss the carry trade. But dollar Swiss is quite interesting right now. We're at a very, very interesting point in the market. You know, can we break sort of 0.92 and move higher? Obviously, dollar's a little bit weaker at the moment, but so is the Swiss franc. But a good carry trade here, potentially, if you're looking for longs there. The interesting markets for me, though, is obviously New Zealand dollar and Aussie US dollar. Kiwi dollar, for instance, I like the idea of price coming up towards the 0.62 handle. We kind of traded back within this volume area as well. And for me, if price is sort of accepted back within value, I like to see it move to the other side. So I do feel like 0.62 is on the cards for New Zealand US dollar. So again, maybe you can look at sorry, your lower time frames here and identify points of entry. Now, what I quite like about this is look at how the market's moved. So we had buying coming in, aggressive sell-off into a level, aggressive buying. What did we have? Volume. Buyers won. Again, we've seen a push out. What did we have? Volume. So this to me is a potential for a good trading setup, especially at 0.62, because I feel like the market likes to go and test volume, right? So for instance here, We had this consolidation all the way down to there. We broke out of it. We come back in, rejected it, dropped lower, sorry. Again, came and tested it, rejected. So there's strong selling volume up in this area here. We've had strong buying volumes. Now, that to me is not really an aggressive move higher, which could give you the idea that there's a potential reversal forming. So I like the idea if the market gets to 0.62, especially these swing highs in there, so maybe we can refine it a little bit better like that, and you start to see rejections at that point, I think it'd be a good idea, or what I would personally look for is some shorts around this point with the idea of trading down to that volume zone. And then if we breach into that volume and breach to the side, could be a good potential to try and attack that volume zone as well. So I'd also look for some further downside then. That would be invalidated if we breach 0.62, because then we've got some higher areas as well. But if I just split this in half, what you've got up at that 0.62 area, I'll just zoom back a little bit. You can see, look, volume is being built. We retested it. Sellers came back into the market. We've got all these volume points here. So these are value area lows and highs that are untested. And if you look at the volume profile there, even if I turn this off and then grab the fixed range volume profile. So this is a 30-minute chart on the right-hand side. I'll grab that volume profile and I'm just going to go from the swing low to the current swing high. You'll see two big pockets of volume in there. Okay, so that's where the accumulation is. So volume, and that is coinciding with that and that. So to me, if you want to be a buyer, you don't want to be a buyer here, right? You want to be a buyer where all that volume was potentially. So I feel like if you get to a key area of resistance and then you start to see this happen, right, then there's a good idea that there's a potential for the market to come and retest all that volume. Okay, so that's what I would potentially look for here on Kiwi dollar. Nice little move into that 0.62 handle. I do feel like we probably will get that. So I'm looking for potential reversals at that point, essentially. See if price can get to that point or not. Hopefully that makes sense. Other question, sorry. Tabo, looking for US dollar longs. What do you think? I'm not against it right now, but I can see that we're at resistance. Okay, so again, ask yourself the question: if you only had $1 million and you had to risk it all in one place, you wouldn't go long here, right? You just wouldn't do that because the market is at resistance level. Okay, where would you rather do that? You'd rather do it down towards these lows because you can see that buyers have been in here in the past. So I am on the fence of buying that right now. I would be more cautious. I'd be looking at a bit maybe the fact that we're coming back up into these swing highs, that maybe the market or the traders that have been long here might want to take some profits off at those highs because they've seen that sellers have come back in here before. So look for the pullback there. If we go to the 4-hour time frame here, you know, a lot of volume down towards the sort of 1.0850 handle. So I wouldn't be surprised if we kind of came down into this area here and then see what happens there. Do you start to see buying pressure come in? You know, maybe they've never tested the trend line. Maybe that's a good idea to then get long. But I always, like I say, look at your risk reward ratio. Say, depends on what you're also doing as well. Obviously, if you're day trading, that's obviously going to be a little bit different. But also, you are at resistance, you know, so you don't really want to go against that. I'm looking at, if I go long here, where's my target got to be? My target's really got to be there sensibly. Where's my stop that's not in the way, really? It's all the way either below that volume there or below here. this doesn't make sense, you know. So I've either got to look for longs down towards the 1.0850, or I've got to look for longs down towards these lows where I can get a very good risk reward ratio out of it, right? So for me right now, if I look at the price of euro dollar, okay, we've had a strong rejection up here and we're coming back towards these lows. I wouldn't be surprised if we got if you did want to be long, this is a good area to do it on the very, very short term. So I'd be looking at like my 5-minute time frame, maybe even lower. And what I'd be looking for essentially is price to come in, reject again, fail to make a new lower low. And then I'll be looking for longs into this kind of area here. And that I'd be done. I'd be out and done. Okay. I wouldn't try and be a buyer for like the next major level of support and resistance. If I was trading higher time frames and I'm looking at the idea of price coming back down towards this zone here. So if I just grab a volume profile again, go from the swing low to the swing high, this volume pocket that you can see here would be of interest to me. So I wouldn't be surprised if we saw a little bounce here, a pullback, and then you've got the potential head and shoulders play. And if price fails to breach sort of 1.0880, that could be a good short, in my opinion. So depends how you're trading it, Tabo. Are you trading it from a day trading point of view? Are you trading it to be in and out, maybe a bit scalping? Or are you trying to trade the bigger picture? If you're trading the bigger picture, I think right now, if I look at that 4-hour time frame, to me, price has sort of come into an area of resistance. I don't really want to be long here right now. I want to be long down towards these kind of areas. Just nothing. Aussie US dollar and S&P 500 are correlated. Have a look. You know, if you go to Aussie US dollar here, you know, the easiest thing to do if you want to look at anything that's correlated, just do what I showed you before. Go to your daily chart. I don't know, obviously, if you have any access to TradingView, but if you don't, then you can go to, let's do it this way. Go to tradingeconomics.com. Okay, so if you don't have access to TradingView, then you want to be looking at other places to get some charts. So if I just go into here, so you got the US 500 there, sorry. So you can click on that. It gives you a chart. Okay, so it says stock index US 500. That's the S&P 500. And if you want to add something to it, you can just go to Aussie US dollar. Sorry, I need to hit the compare button first. Sorry. US 500. And then you can compare the two charts, okay, very, very quickly. You can have a little look to see, are those two pairs correlated, you know, or are they not? So I'll let you kind of make your own assumption there. It looks to me like it can be fairly correlated since sort of February 2024. We've seen a bit of a correlation there. Would it be a strong correlation? I don't know. You know, looking at this, I wouldn't say it's the sort of strongest. Maybe the dollar driver is behind that sort of correlation there, obviously. So, but yeah, that's a good way to do it. Or you can obviously do it on TradingView the way I showed you before. But I can see here, you know, there's a little bit of a difference between some currency pairs, isn't there? So, for instance, this is where I'd be looking to kind of trade the difference between sort of trading a major and a minor, just kind of coming back to Vincent's point, which pairs do you trade the most and why? I would look to trade a minor currency pair if there's a real good difference between sort of fundamentally, so like interest rates, GDP, things like that, or we've got this really good technical outlook here. So if you notice, the Australian dollar versus the US dollar has a little bit more of a way to go before it hits the resistance, whereas euro dollar, on the other hand, has already hit the resistance. So could we potentially look at Euro Aussie for short positions, essentially? That's the way I kind of think about it. So if I look at Euro Aus right now, I haven't looked at this chart in a minute, but we can see that we've breached 164s. We've come back into those highs and we're starting to trade lower again. You know, could there be an opportunity to see price come back into these recently formed swing lows, maybe around about the 162.30 area, because Euro US dollar is at resistance and the Aussie US dollar is not yet there. Okay, so it tells me there might be a little bit more space to go, which gives me the idea that we might be able to short down towards these swing lows on EURUSD. Okay, so you might be looking at maybe if price closes below these lows here, you know, a little bit of a short play down towards that kind of target area there. You know, stop's not in the greatest of places. I would much rather be short, you know, back up at this swing high with stops above the swing highs, target down towards the lows there. But, you know, depending on how you're trying to play that at the moment, that would be a little bit more intraday, I reckon. So looking at the 15-minute time frame, what I'd be looking for is price has obviously traded higher. We've now broke that trend. So what are we looking for? Sort of a lower high, right? Where could that lower high come into effect? Well, if we look at the chart, I either want to be short at highs or short at the sort of a level of resistance. So the way I kind of see that is you've got this kind of bullish candlestick within the downward move. That could be a bit of a level, or this area up here, right? So if price comes back into here and you start to see some bearish rejections, then that could be a good idea to look for the short-term move to the downside. Or if price comes back to the highs where we saw that selling pressure come in, that could be a good place as well. Okay, so that's the way I kind of look at things. And, you know, really good example of this. Let's go and have a little look at those majors. You know, where did we see the market sort of turn? Okay, and we're going to try and look for a difference between the currencies at this moment in time. So Wednesday, the 17th of April, we saw Euro US dollar start to turn. So I want to try and look around that sort of similar time to see if any kind of currencies were still kind of making its way to the downside. So that was the 17th of April. So if I go to cable, where was price on the 17th of April? So cable was still technically bearish, right? So I reckon if we go over to euro pound, what should we really see? Well, if we're seeing pound downside, euro upside, we should technically have seen some upside around that time. And that's here, right? That's there. Okay. So the market rallies to the upside, right? So that's how you can use the majors to trade the minors. You try and identify the majors that are coming into those big levels of support and resistance, and then go to the other majors and see if there's a difference. Is price trying to make it to that point, or is there, let's say, for instance, there cable hadn't reached the key area of support, so there might be a little bit of a difference there. That's how you can capitalize on your minors. I wouldn't just go to a minor chart and try and trade it without understanding what's going on the major currency pairs, right? It's like, why would I want to be buying yen at the moment? I wouldn't, you know, so I'd be looking for longs. So like Aussie yen longs, for instance, up into the 105 handle. Kiwi yen longs I really like. Pound yen longs, love them as well. You know, I think those are good markets to look for. So yeah, hopefully that makes sense. Tabo would be scalping euro. Yeah, so I think if it's different. If you're scalping euro, then I like the idea of seeing buying coming in. You do have data coming up in 10 minutes though, so I wouldn't really be scalping around that time. But yeah, let's have a quick flick over to the currency strength meter then. We'll have a little look at the 50 MA strength meter this week. So yeah, pound yen, longs, pound CAD, pound Swiss still seem to be the sort of top areas there. So those could be some main focuses for this week. Pound yen, I think especially, you know, what you'd be looking for is some kind of, again, decrease in price. Have a little look at lows. You know, for instance, here you could trade that sort of counter trend line break. But essentially, if price puts in a low, see if price comes back to it, gives you an opportunity to get long. At the moment, we've got a low that's forming down towards this area, but that is an hourly. Let's look at the 4-hour time frame. Potentially got some lows forming around about this sort of 200 area. So maybe a bit of a pullback into there could be a good idea for some longs. We are approaching that sort of spike higher. But dollar yen hasn't reached that point yet, right? And remember that you want to be looking at your majors for the drivers. And I think dollar yen needs to at least get back to 160 or at least 158 in order to see another bit of downside from dollar yen. So I still like this upside move here, but against currencies that are stronger. So if we go and have a little look at Aussie yen, for instance, we are starting to see a bit of a pullback on Aussie yen. But where are the kind of key swing lows? Let's go to a 4-hour time frame. So where would I want to be a buyer of Aussie yen? Either here, maybe in here. Okay. And then we just watch it, because if price doesn't come back to these points, it's going to set a low again, isn't it? So I'd just wait for another low to form. I'd identify it. I'd see if price comes back to it and then look to get involved. Do I want to be a buyer of Aussie yen there? Well, no. We're at resistance. Get rid of all these. These are all the signals from last week, really. But, this is what I'd be kind of looking for. You've got this bit of a pullback there. Can price come back to that? That would be a good area to be long. It's very much like what we saw when price was kind of making its way to the upside, Consolidation, price comes into it, rallies. Could we extend that out and say, there's the consolidation. Does price come back to that and rally from there? So that's what I'd be kind of looking for here at the moment on Aussie yen. Pound yen, like I said, very similar. Let's have a quick flick over to Kiwi yen. Really like Kiwi yen, sure. I've got a massive zone of resistance here, though. So if I just go up to the monthly time frame, this was the 07 highs on Kiwi yen and the highest point 97.83. I mean, I don't have any data going beyond that. I only got data going back to 04, so I don't know whether there are some bigger levels beyond that. Probably are, but this is just continuing to sort of motor higher, and that what's driven this move. If we think about it, what has driven this move? Well, you've seen the RBNZ and the RBA not looking to cut rates. Their inflation rates have continued to remain higher than most of others. So they are not going to be cutting interest rates now. That's why we've seen this sort of more of a boom in the sort of the commodity-backed markets, right? So Oz being one of those, as well as the New Zealand dollar. They've outperformed, okay? So to me, there's probably a little bit more upside to those currencies at the moment. But it's about being smart. Where do you want to be long? You want to be long at cheaper prices. That is not a cheap price. I would say I want to be long potentially around this area here, 96.20 or even lower if we can get it. Price comes back down towards those lows. That would be more ideal for me. Okay. Right then, guys. We've been running for nearly an hour now. I might stick with you, though, to see the news. If anyone wants to stick around as well. Does anybody want to play the higher and lower game again? Let's have a quick flick over to dollar CAD. So this is another market which we spoke about, and I felt like I was going to be wrong if price went above 137, but look where it came into. Came up into this pocket of consolidation. What is consolidation? It's volume in the market. And it tried to breach it and failed. And then look what happened since. And I felt like I was wrong on dollar CAD. I mean, I still might be wrong, to be honest. I felt that 136 would be breached and that we would probably be seeing lower prices down towards 135, 135.50. And a lot of my analysis came from the oil market. All right. So if I just go back to this chart here, and if we just delete this and let's go to dollar CAD. Okay. And I'm just going to hit the compare chart and just put in crude oil. Okay, and you can look at the correlation between crude oil and US dollar CAD. So crude oil being that blue line. And we were getting a significant drop in crude, and dollar CAD prices were just rallying. And I just felt like there would be a sort of snap moment where dollar CAD comes back and tries to follow basically the crude oil path. And, you know, I was trying to look for potential shorts around 136.80. Obviously, that was unsuccessful. The dollar sort of, or dollar CAD rallied into the next level of resistance where we saw those kind of big selling taking place. Now, if we go take a look at oil, you know, what is oil doing at the moment? We have a little look. We can see it's actually starting to rally again. I actually went long oil on Friday. Just have a little look at this 4-hour chart. I went long oil here. Stop losses below the low. My first target was 167. Sorry, 1.6 hours, around about $78.50. Second target was just a little bit higher, 78.87. I didn't feel like we would get back above 80. But, you know, I might be proven wrong there. The market seems to be pushing higher. But essentially, I went long crude oil here because of the fact that we were in this daily downward trend, but we were at the lows again. Okay. And if you look at the daily chart, we had a close above the low. So it was a little bit more of a riskier trade, I would say, you know, because I do technically want to be potentially short this market. But I noticed that the market was working between the $80 level now and the $76 sort of 60 area. Okay. So I felt that maybe we'll see some buying and then some selling again. And this is why I'll keep kind of pointing out the highs and lows. And I keep saying to you, where would you want to be short? You know, you don't want to be short here because your risk is too high. Okay. You want to be short up here where that buying pressure turns into sellers. Okay. So maybe we're starting to reach that point again. You can obviously refine it. I like to use the wicks because that to me is extremes. So I like to use the wicks there. But yeah, maybe we see a push into $80 and a rejection there. So that's potentially something to look out for. You know, we've got these new lows forming down here. So that could be a good area to see price kind of come into in the short term. So keep an eye out on oil. Obviously, if price breaches this kind of overall downward trend that we're going on at the moment, maybe we're getting an early warning sign here that we are going to start to see higher oil prices again. The market kind of approaching the sort of $90 area. So have a quick flick on to OPEC before I leave. We've got that dollar data coming up shortly, so we'll have a little look. I like to just go on to the OPEC news site and just have a little look at what's going on. OPEC remains optimistic about global oil demand. So that was a oil market braces for OPEC decisions as crude prices climb. Might have to do a little bit more research here before I kind of have a little look. I do know that OPEC were cutting that production down until June. So we're coming to the end of May now. So yeah, part of the reason why OPEC is failing to keep prices high is because its members are failing to keep their output targets. In March, the group's leaders and Russia extended production cuts, found a reduction of 2.2 million barrels per day or 2% of global supply until the end of June. Okay, so it's to the end of June. Okay, it's saying they're now overproducing so much that its daily output in 2024 is a little changed. Okay, so maybe we are going to see a little bit more downside. They're overproducing at the moment. So maybe a short around $80 is not too much of a bad thing to look into. So I'll keep an eye on that. Let's see what this data drops then. So we've just had 3 o'clock hit. Let's see if we can see that data. Let me find the right page. Have a little look at 102. Okay, so what we should be seeing in theory and a revision higher is some dollar strength. So let's go and have a little look at that. So we are starting to see a snap reaction of US dollar strength. Okay, a little bit there. So let's go take a look at the VIX is up as well. That's interesting. So we should really see stocks down as well. So if we go over to the S&P 500, should start to see a little bit of a decline here as well. We are starting to see that sort of breakdown in there, which is quite interesting. Again, look at that high that formed. Look where the selling took place again at that point. NASDAQ down, Dow Jones down on that information as well. Gold down as well. So yeah, the correlation between gold and sorry, that's silver. Between gold and the US dollar starting to come back a little bit here. This was that level we were talking about. You know, is that going to be the point where we start to see some selling come in again? Maybe the news can be a good catalyst for that. Maybe look for a lower high. Bit of a continuation to the downside. You know, that's obviously a little bit higher than estimates. You know, estimates were looking at around about 96. We did get a revision higher on the previous from 97 to 97.5. 102 is pretty good, though. 102 is pretty good. So, you know, again, that kind of plays into the hands of, are the Fed going to cut? You know, I don't really see it happening right now. There needs to be a bit of a shock in the market in order for the Fed to cut interest rates, I feel. You know, this could be the potential little bit more downside back into these kind of areas here on gold. So, we'll, you know, keep an eye on that one this afternoon. Right then, guys, I'm going to leave it there. Thank you for everybody that joined me today. I really appreciate you all. I'll be on again on Thursday at 2 p.m. GMT. If you have any questions, you can come chat to me then. And I will speak to you then. So, yeah, thank you for everybody that joined as usual. If you could leave the stream a like, I would really, really appreciate that. I'm trying to get the likes up. You know, maybe let me know in the comment section what you want to see from the live streams. You know, do you want to see more sort of chat about the majors and the miners, when's best to trade them? You know, wants to talk about cryptos. So if you want to talk about cryptos, I can do that as well. But let me know. Thanks for joining me, guys. And I'll catch you next week. Cheers.